Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Wednesday, midweek. We had a two-day pull-in. Some could have said it was telegraphed, others, taken by surprise. Either way, it wasn't so severe. There's some stocks that have still acted well. It's just been a bit more selective. We talk about the 8-day and 21-day moving average as a guide, okay, for upper active momentum for traders to use. And if you do so, yesterday, once we spent a little bit of time below the 8-day, at least you could have reduced a little risk, especially in the indices, and then maybe even had a spider overnight short, which is what I tried to do because I wasn't sure whether or not we would continue to fade lower and where would we stop, and so on and so forth. So anyway, let's just get a look at the charts here. So here is your range, and this was your reversal way back when. Since then, it's been a pretty methodical ride. When it broke the downtrend, digested above it, and then here was your first move below the 8-day. So if this was yesterday, the 8-day was, I can't see it on here. Wait, actually it's not on the bottom. But anyway, whether it was below it here or not, some people are like, oh, well, it was one day below it at a different time. Either way, all this is your upper range that got a little breached. Basically, when all of consensus gets real bullish, what happens. And came in, touched the 21-day or pretty darn close to it, and rallied off it. So does this mean we're going back to new highs by the jobs report? No. Does it mean we're going to come in and test the 50-day? Who knows? At this point, if you reduced a little risk here, maybe you put a little bit on there and you figure it out. All in all, though, charts and stocks didn't do so bad. If you take a run through, everything's kind of trading differently. Just take a quick look at Amazon. Still, I guess, Kramer pumped it this morning, didn't really have much traction, tried to get above these levels, couldn't hold it, so for momentum, not quite there. Okay, it's been a great trade since the gap and go on earnings, and now it's getting a little wishy-washy, and who knows, maybe it hits the 21-day. At that point, it's still well off those lows, so you got to realize that things just change their speed from time to time, because Netflix actually did it, okay, traded below, okay, this little support, and almost touched the 21-day. So all in all, if you bought it here and you held through, probably a little painful. If you're trading it, still hanging in there above the 8 and 21-day, below this one, which gives you a sign of a little bit of caution. Apple still really not doing much. Tight range. I didn't go home with Apple today. I probably could have waited, but it was like lethargic and weak all day, and just at this point I'm going to wait, I guess, and see how it reacts. I don't think there's going to be any blockbuster news that I'm going to miss out on. The event, I believe, is Monday. It's trying to let this, I guess, 21-day kind of catch up, so we'll see what happens. If it still stays in this range, if you're still long from this reversal, I guess give it to 126.61. You could have even given it to 128.09. I just didn't. I just kind of, whatever. I got a little bored with it. I probably should be in some, but I'll wait till tomorrow. Google still trucking along. Big move above this, this area that we talked about, this 550, and now it's still going sideways. Maybe a few more days lets the 8-day catch up, and it could go. Some of the new issues, or the older ones, are in vogue. I know Sperling is doing a better job with it than I am right now. SHAK, he's been holding it for a little while, and turned up here. Got a little wishy-washy, did clear this little spot, so who knows, maybe that can continue. JUNO, some people were looking at it also. This also turned up and had its second day, not so bad. This is when it woke up. Here's your little bit of follow-through, see how much further it can go. The bios gave some clues early on that we weren't going to fall apart. It reversed first, and if the market was going to fall apart, chances are the bios would not have perked up like this and almost trade through the highs. So that gives you little clues that, at least if you didn't get long, into this 21-day, at least maybe you didn't press it, because there were guys saying out there they were pressing and that we're going to fall apart, and this is your 25% correction. And meanwhile, all we did right now is touch the 21-day and come off it. So we'll see what's next there. Social media, this Facebook looks really good. I'm hoping that this time it's not a fake out. At this point, it really doesn't give you that many clean moves. It's perking up right into this old high. You saw some commitment here to it, right into this area. It's above all the moving averages. It's been in this range, so we're not chasing it. We're not a momentum mobro here. We're saying this has been a strong stock showing leadership. It's been in a range since, just say, August. 1, 2, 3, 4, 5, 6, 7, 8 months, ready to break out. If you were playing something for a breakout, this is your time to try it. Okay, does it get above this 82 successfully and break out and get to 84 to 87? We shall see. I don't know if we need to catalyst, what the story is, but if you look at the weekly chart also looks like hanging out up here. It's got to take out this range and go. It's above all the moving averages on a weekly. You look at the monthly chart. Monthly chart is starting to add up too. You have, remember back in the day when I came out with the cup and handle on it, and this was back then. Since then, you had a nice move. Okay, it's hovering in the upper end of this range, and if it's going to get through 85 or 90 or get to 95, a lot of price targets are at 100. It's going to have to break out above this. So everything's pointing that it should. So for me, I'm in the stock. It's probably my biggest position right now. And I also tweeted when it was like 80 and a quarter that I bought the 81s for March 20th. And we shall see. It cleared this little area. So at least if you bought it above this 79.90 is a day trade and you didn't take it home, at least you made some money. Then maybe tomorrow we'll get a chance to buy it through this if that's the case. Twitter tested the 21-day and held it. Not the most momentum type of scenario, but at this point you had this little reversal at 50, so I got out of the stock then. I didn't get back in here. I'm giving it some time. Big move from 38, broke the 8-day, held the 21 days, so now we'll see what happens here next. LinkedIn also, couldn't break out, couldn't break down, still in this range, so I'm just avoiding it, seeing where it is. Ever since this little topping tail, it's been under pressure. It's just a hard stock. What else is going on here? In bios, some people ask me, why did I buy the GILD options? You know what? I don't like to trade and hold bios, but a lot of people are talking how this, could be a good breakout above this 105. Technically, it looks like that. You could draw yourself a little bit of an inverse, head and shoulders pattern. With that being the neckline, if that's the case, have like 85 to 105. That gets you new highs here, and the bios have been strong. So instead of sitting in it, I'm like, let me go out to the March 20. 104, so if it goes and some kind of news happens, I'm in it. If not, risk is premium paid, not the biggest deal in the world. What else is going on? BlackBerry. I got out of the rest of my options today. If you remember, we bought a decent amount here, sold some into that, sold into that. I had the $10 ones that expire Friday, so I just got rid of the rest. I also sold most of the stock and got stopped out today when it went below this area, but it held in okay. I would say let it build above this a little bit, and maybe next time it exhibits a little bit more power to really get above this area. It's been spiking and coming below. Maybe this time it spikes and holds above. Just remember, from 940 to 1140, it's still 20% in like 2 weeks, so it might need a little time, so we could always revisit. Pandora, unfortunately, or fortunately, whatever, this. I got out of it just because it was in the morning. I was getting hit with a lot of things and wound up holding indecent. And at some point, maybe above this 1580, it fills a portion of this gap. I'm not sure what it's going to take, but this is one of your, treasures for trash. If someone else's trash bin could be your treasure if that happens. If you're still in a good job, I think you're better off just taking some options so this way you don't nickel and dime it, but longer term even. So you'll see. As far as what did the TLTs do? Not a heck of a lot. All day they were down. If we were going to be really that weak, you would have thought the TLTs would have rallied. Here's that accelerated trend that it broke. Here was your little day trade, and now it's back here. Okay, and jobs reports Friday, so we'll see what's happening. Not much of a bounce back. If you trade the accelerated trend, that was your sell. Now, if you trade more intermediate trends, here's another area. You want to look at something on a more macro basis. It seems like. You could draw a line like this, which will take you almost to the 200-day, which is down at 121.60. So if we do get some kind of hot number on Friday, just be careful if you're just blindly holding this, okay? Because it's been a really nice move, and just protect it. It's broke the accelerated trend here and held. Broke the accelerated trend here and held. Remember, it broke this accelerated trend here and held. So this was a real big accelerated trend. So chances are you might get a dip to buy, but just be careful, and you're better off selling it here so you could be a little bit more opportunistic into a bigger support area. So you'll see what happens there. XLF it's still in that range. It's just a little lethargic, I guess. you know, you have your haves and have-nots. I've tried a few of them a few times, and you know, they're not really working for me. I haven't made much money in the banks. This was your red dog reversal right here, and now it's going sideways. So I guess if you're still in it, be in it verse 24.15. Today was interesting in BABA. Pretty big engulfing day. It broke this, you know, the IPO low, which probably got some last forced selling out, and then engulfed it and came up pretty quick. This puts it on the map where I think traders that made money today long it because it was strong all day. Says, wow, okay, big engulfing bar into the downtrend. Granted, up here, it couldn't really do much with this downtrend. Maybe down here, it tries something different. So now what I would like to see is maybe, you know, hold in here a session or so and then give you a juicier trade through this 87 for, you know, for a little bit better action. Just even have it on the radar, because in here it was horrendous. This is your first day that maybe, you know, it wakes up and you could trade it. BIDU also, it's been caught in this downtrend, you know, and at this particular point, it's still in it. It did try and perk above this little 207.50. Some people are long it, so see if that continues. It's descending in nature. It's still not showing you that it's like waking up and ready to get momentum, but something to look at. Now that BABA might have put in a short-term bottom, this might act a little better, but it's below other moving averages, so it's really not a leader. As far as what else went on today, I feel like there was a lot of little thin offshoot stocks that had decent days, and unfortunately I wasn't involved in a lot of those. And you know, two-day controlled pullback, no real catalyst except for that the market has felt a little tired lately. You know, we've come a long way. February was a big month. The consensus was all NASDAQ 5,000, so the market's kind of cute, likes to do the opposite of what the consensus wants. I do think at some point we get back above 5,000 and then sustain ourselves above it. You know, some little signals that we are tired, so you can't just be buying everything. You be a bit more specific because we're getting some divergences within sectors and definitely from sector to sector. So don't need to be all in, don't need to be all out. Use your tier system, take your trades, and just keep looking for the action. Hopefully you remember my note, because I have like 30 stocks in there with levels and if-thens that, you know, could wind up, you know, being a good game plan for you if you're having a hard time finding ideas. Recently also some guys are looking at a sifter or a filter where, you know, you see high volume spikes because there's not been a lot of volume. That tells you where some action is, and then perhaps you make a trade. I know guys saw this kind of early, the BMY. Look at that. Boom. Started getting going. It, you know, went off on every filter, and look at this clean move all the way to highs. So something that wasn't on anyone's radar. The news picked it up. It held in there, and there you go. So there is some ways to make money in news plays on offshoots of things that we don't normally have on our go-to list, but the only way you're going to find those are in some type of filters. And Sperling has a really good filter. He's usually where the action is. So, you know, if you're following us on the virtual trade floor, he's a guy that typically has a lot more positions working, maybe 8 to 15 versus my 3 to 5 that are usually in my wheelhouse. So with that said, it's supposed to snow tonight again and freeze. So there's a chance that I'm probably going to work in Short Hills tomorrow. There's not going to be a morning call. I'll be on the radio. I'll be on Twitter. I'll be trading, but not in this office where there's a studio. So someone else will probably do it remotely. Good luck. Have a great night, and I'll see you tomorrow.